Hi, my name is Ed Fernandez, and I am President and CEO of 1031 Crowdfunding. Today we're going to talk about what is a DST. Well, the DST has been around since 2004 directly on the IRS website as an option for a 1031 exchange. So to try to keep it as simple as possible, you can think of a DST as a living or family trust where there's a trustee managing a trust for the beneficiaries of the trust. In this case, you as an investor become a beneficial owner of a trust that's on title of real property, allowing you to continue to depreciate the asset, write off all your expenses as you're doing today. You'll receive monthly income. Most of these DSTs got stabilized assets in them and are producing current cash flow. And when the property is sold, you and all the other investors will receive 100% of any potential upside while still having another 1031 exchange. How can a DST be used in a 1031 exchange? Well, it could be used in several different ways. One, it could be a backup option. You still want to remain active and you're not sure that what you've put on your form when it comes to your exchange is going to happen. Put a DST on there, just in case, as a safety net, because the DST may be there and you may be able to satisfy your exchange by using it as a backup. Also, it could be your primary exchange. Look, if you're tired of dealing with the tenants, the toilets, and the trash, and you just don't want active management anymore, but you definitely don't want to pay the taxes, well, you can use the DST in that way as well. The reason why is because the DST is already owned by the trust, and you don't have to worry about what we would call closing risk. So because the trust already owns the DST, we can literally satisfy your exchange as quickly as in 5 days. Who qualifies to invest in a DST? Even though you're buying a piece of real estate, it is within a wrapper called a security. And these securities are called Reg D private placements, and they are illiquid investments, meaning they're not like a stock where you can push a button and get out in 3 days. And so because they're illiquid, you have to be what's called an accredited investor. An accredited investor is defined in two ways. It's an or, not an and. Either you have an annual income of $200,000 a year as an individual or $300,000 per couple, or you have a net worth of $1 million excluding your primary residence. What are some of the benefits of using a DST? Well, you're going to get involved in institutional quality real estate. Most investors cannot buy apartment buildings on their own or senior housing facilities on their own, industrial, self-storage, or even single-tenant, triple-net lease deals on your own. Here is an opportunity to be able to get into institutional quality real estate while still satisfying your exchange. Other benefits of the DST is because the trust already owns the real estate, you're removing what we call as closing risk. And closing risk means, am I going to close on this property? I'm already past my 45 days. Well, that all goes away with the DST due to the fact that the trust already owns it. What are some of the risks associated in a DST? Well, the biggest risk, it's illiquid. You can't get out whenever you want to. That's risk number one. Risk number two, it's economic risk, right? What is the economy doing? What type of real estate are you getting involved with? Where is it located? How long has it been operating? Another risk is management. Who's the sponsor? How long has the sponsor been in real estate? Has the sponsor actually been successful in actual deals going full cycle? Those are the actual common risks when it comes to a DST. How can our platform help? Well, our platform has arguably the largest inventory of DSTs in the country, number one. Number two, it has the ability to allow you to do your own due diligence. We are here to help you, but sometimes you may want to do it on your own. So on the platform, you can go and you can get an appraisal, a title, a survey, a property condition report, a rent roll. You can get all the third-party reports you want just because the platform has that for you. In addition to that, the platform will allow you to create your own blended portfolio. So if you want a little bit of the apartments or senior housing or student housing or self-storage, you can actually create your own mini mutual fund and diversify your risk. These are some of the ways that the platform can help. Hopefully that helps answer some of your questions. But if you have some more questions, please give us a call at 844-533-1031. Visit our website at 1031crowdfunding.com or leave comments below. Thank you for watching.